Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, we want to focus in on the Bank of England decision from yesterday, decision to increase interest rates by 0.5%. I'm joined by Matt Henderson, one of the portfolio managers here at True Potential, to discuss really what does that mean and why have the Bank of England taken that decision at this point in time. So Matt, maybe you could bring to life the inflation backdrop and some of the forecasts that the Bank of England are talking about.
Yeah, thanks, Jeff. So as you said, Bank of England yesterday hiked rates by 50 basis points. It's the highest rise that they've done in 27 years. And as you said, it's all to do with the high inflation that we've seen year to date, not just in the UK, but also in other developed economies. So current forecast from the Bank of England is inflation to peak at around 13% in October. That takes it to 2022, the average over the year, to be 9.5%, which is up from their original forecast earlier this year of 5.9%.
And it's worth reflecting on why that forecast has changed so much. So from in the region of 5.9% to now 9.5%, it's really driven by what's happening in the external side of the economy in terms of energy prices.
Yeah, and it's all been triggered by the Russia-Ukraine conflict that we've seen in March of this year.
And that is, I think, from their point of view, they've built that into their forecast. They've assumed that energy prices stay at these levels for a longer period of time. Is that right?
Yeah. So we've also seen the 2023 inflation forecast push higher as a result.
They're expecting inflation to stay at an elevated level for a longer period of time. But I suppose what it also is highlighting is the challenges of trying to forecast at this point in time. And as you were mentioning earlier when we were looking at the report, the jaws or the fan charts are very large at this point in time.
Absolutely.
When we look at what it means for the broader economy, what is it that the bank are trying to achieve by increasing interest rates at this point in time, by the magnitude that they have?
Yeah, so by increasing interest rates, they're looking to pull down inflation from the high levels that we've seen, and obviously that's going to have a feed through into the growth numbers that they've also forecasted in the MPC report.
And it's important to think about that as pulling down growth in the domestic economy as a means to try and bring inflation down overall. It's difficult for them to control energy prices effectively.
Yeah.
And then have they talked about their views on unemployment and how that trends over the next 12 to 18 months as well?
Yeah, so we're seeing similar things as the higher inflation and higher interest rates come through. Their expectation is for unemployment to also pick up. So that forecast has moved up to 4.4%, up from 3.3%. So once again, seeing higher there. But as you said, the difficulty of forecasting at the moment, given the backdrop and the uncertainty we have.
And in terms of unemployment's a good point to think about other data that we've got today as well. We've got the US non-farm payrolls. Is that something that the market will look to focus upon?
Yeah, so the market will be looking at that. As we know, US has posted 2 negative quarters of GDP growth, but to get the MBER to define a recession, there's not just GDP to look at, there's other indicators, and one of the key inputs into that is also the unemployment data. So be key for market participants. Current expectation is for the US to add another 250,000 jobs over the past month, so keeping the unemployment rate low at the current 3.8%.
Thanks, Matt, for joining us today to discuss what was a very important monetary policy report from the Bank of England yesterday. A change in tone very evident in that report. And please do look out for the Do More With Your Money show that will be coming out later today. Join us next week when we'll be bringing together some of Matt's comments there on the non-farm payrolls. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.